Hey, welcome back to The Market Investor. I'm Daniel Snyder. I hope you're staying safe. I hope you're staying healthy out there with everything going on that we need to talk about. Why wait? Why wait? But I will say one thing. If you don't own Costco stock, take a look at this photo that I took today when I went to go shop at Costco. That line goes all the way down and through the parking lot. If that's not a reason to buy Costco stock, I don't know what to tell you. Costco is one of the best stocks you can probably buy right now. I mean, I'm looking at the chart right here. The stock back in January was at an all-time high of $325. And now it's trading at $286, right? It's a great stock, great company. The company is solely focused on moving the volume of items and not the margin. The membership, everything just equals out. Great leadership. Highly recommend it. But with that being said, let's dive right in. The first thing I want to talk to you today about is the truth of what is happening in the markets right now with the coronavirus ordeal going on. And it's going to come off as extremely fearful. There's a lot of negativity in it. I don't want you to focus on the negative emotion of it. This is why we have to focus on controlling our emotions, looking for the solid trades, understand what's going on in the market so that we can have a clear mind when we go into our investing and trading strategies. But I want you to know what is going on so that you can take that information, use it to calculate, and then make smarter trades. So you hear about the Fed, right? Let's get into the Fed. The Fed balance sheet, the Fed is who prints all the money. They control how much money is in circulation. They have a debt balance sheet, which is at an all-time high. It's over $5 trillion. It has never been over $5 trillion ever until now. So why is it? Why is it that we keep hearing about the Fed and how Donald Trump was going out and attacking Powell, who's the head guy of the Fed right now? And it's pretty much he wanted to get interest rates to zero. We've gotten interest rates to zero. It's enticing people to go out, refinance their mortgages, go buy new cars with auto loans. It's trying to get the consumer motivated to go out and spend their money. And if you remember in the video that we posted recently, talking about how cruise ships are not great stocks right now because no one's going to go out and start spending money. This is the Fed trying to control that, entice people, wet the tip of their tongue, just so that they can go out and start spending money. What is happening, though, is that the central banks, so the Fed is our central bank in America. There's central banks all around the world. And when all of this coronavirus stuff started happening, the central banks would jump on the phone, they'd have meetings, and they have to agree to pretty much pump money together into their countries. If they do it together, you'll rise the ship evenly. But if one country is printing money and the other person's not, it's going to create an imbalance, right? And so once we have that imbalance, that's what makes a currency stronger, another currency weaker. And it's what we're seeing right now around the world. But as they're all printing money, we have to continue to print this money because the Fed is pretty much going out and buying securities so that our market is liquid. If our market was to shut down, there would be a run on the banks. Everybody would run to their nearest bank, wherever your banking is, and you would go and want to pull all of your cash out of the bank immediately so that you could hold on to it, because we don't want something to happen like market crash of 1929, right? People ran on the banks and the banks had to shut down and say, sorry, we don't have your money. So this is what we're trying to do to prevent that. We're pumping more and more money, and we're just going to keep pumping money because the other thing is, well, we still have mortgage-backed securities, right? Maybe you remember that term from the 2008 financial crisis. Yeah, we still have them. We never learned. We can't have this biological issue turn back into a financial issue, right? We can't have an illiquid market to where people start defaulting on their bonds, their loans, their assets. I mean, literally, it would create a tumble. And the other thing you have to understand is there are a lot of countries around the world that are backed by the US dollar. What does that mean? So back before the Great Depression in America, America used to be backed on the gold standard. And there's still a lot of countries that are. The gold standard, so however much money you have in the economy, correlates directly to how many gold bars you have, right? Back during FDR's New Deal, we removed America off of the gold standard. And we said, no, our US dollar is strong enough And what that enticed other countries to do is go, okay, well, you're the great consumer spending country of the entire world. We're going to get off of the gold standard as well. And we're going to back ourselves with the US dollar, which is also why in 2008 financial crisis, when we tumbled as a nation and our markets tumbled, the majority of the world tumbled with us. It goes back to that ship analogy. When one falls, the ship rolls over. That's just how it goes. That's how this delicate machine that has been created, how everything has to be equally balanced, can easily fall. So what the Fed is doing right now is pumping as much money as they can. We can't have these mortgage-backed securities go default. If we do, it's financial crisis all over again, and we want to keep this a biological issue. So there's that. The second thing I want to talk about is the oil market. The oil market, the price war between Saudi Arabia and Russia is something that can't be ignored. You'll hear about, there's Chevron and Exxon and Occidental, all these companies in America that are down drilling in the Permian Basin, and they drill in the Gulf. They're all starting to shut up their rigs. Just because barrel has gotten down to like $20, gas has gotten down to $20 a barrel. It's not very profitable. You got to think about Saudi Arabia. They're not enticed to not stop pumping oil. They can pump some of the cheapest oil in the entire world for like $5 or $6 a barrel. And then anything over that is pure profit. And the other thing you got to realize about Saudi Arabia is they have a vision plan that they've been working on. They want to transition their economy off of the need to drill and sell oil into a tourist destination. Right? That's the whole push behind Dubai, creating islands, making it big and glorious. And if you build it, they'll come. Well, if they don't have the money from the oil in order to use it to pay for the government fees and the construction and everything else, I mean, the easiest way to put it is they have nothing to lose. So when Russia came in and they said, no, we're going to start pumping oil, we need it for our economy, of course you're going to upset the oil cartel of the world that can pump oil for next pennies to nothing. And yet everywhere else, like in America, there's rigs that have to have gas at like $55 a barrel just to break even. So you're seeing unemployment, you're seeing rigs shut down. A lot of oil companies all around the world are getting squeezed. So what was just announced today was Russia and US are now in talks to see if they can help to try to find a way to stabilize the oil market. And the thing you got to realize too is a lot of the factors of the market are controlled by oil. As oil goes down, the rest of the market will go down. As oil goes up, the rest of the market will go up. So it's in everybody's best interest to get the price of oil back up, even if gas is cheap for consumers. But the problem is no one's driving right now. There's no demand. Everybody is at home. You have the safer at home effect. People on lockdown. There's literally just oil sitting in tankers out on the ocean because there's no one to buy it, right? So you have this huge oversupply. Gas can go down to $10 a barrel, $5 a barrel. Saudi Arabia is in a position with nothing to lose that they could let oil go into negative territory. Think about that. They would be paying people, other countries, to take their oil just so that they're not getting it from somewhere else. Because that's how a cartel works. And once all these other countries will shut up their rigs and everything else, then Saudi Arabia has the momentum and the position of the market share to immediately turn back and say, great guys, oil is now $75. And with no competition, nobody has anywhere else to turn to buy from it, then of course they're going to make their money back. They may not hit their 2030 deadline, but they'll get there eventually. I mean, the thing, just another number for you. The US alone uses about, typically when we're not in a lockdown, typically uses about 20 million barrels of gasoline every day, right? 13 million of those barrels, we started producing ourselves in America so that we only had to import the extra 7 million barrels every day. Because the whole idea was for us to go energy independent, right? Everybody realizes that oil is not going to be the long-term commodity thing in the future. All of our cars, our businesses, everything will start to just use solar, wind, alternative energy. It is the future. Everybody knows it's happening. It's the same way here in Los Angeles. Tesla is completely taking over. You cannot drive on the highway without seeing Teslas. The solar panels that they're making for the roofs. I mean, an extraordinary company that is completely leading the charge into the future of alternative energy so that we can take better care of our earth and really just get off of our need for drilling into the earth to get oil. I mean, there will still always be a need, but it won't be like the need we have now. The last thing I want to say about the oil war is, politicians, even though US and Russia are now talking with each other on how to stabilize the markets, the politicians really can't intervene that much. When you really think about it, it's a free market. The world is a free market, and it's made up of buyers and sellers, the same way the stock market is. But if politicians get too involved into the market, that's what transitions something from an oil war to a military war. And it's the last thing anybody wants, right? We've been through 2 world wars. We don't want another one. And we all kind of know that oil has been the cause of wars all in the past. And it's true. Even if it wasn't the main factor, it always adds in there a little bit. So the whole idea is, how do we stabilize the energy market without actually controlling the market? Because once somebody starts to control the market, who knows where we'll end up. But things are what they are, and we're going to take this information, we're going to use it to calculate better trades, better investments, and hopefully end the year in a nice, big, positive territory. All right, that's all I have for you for this video. Just those 2 topics. Sorry that they're so negative and they're so in-depth about the problems that we're going through right now. But it's definitely something that you should think about and use to calculate your investments and your trades during this trying time. If you have any questions, leave them in the comments below. I hope you'll hit the subscribe button to the channel. I hope you'll like the video, and I'll see you in the next one.